Good afternoon. We are doing it live, doing more at 4 weekday afternoons right here on Mottek On Money on 790 KABC. We do all this right after Guy Benson and just before the 790 KABC News Blitz with Randy Wang at 5. And be sure to stay tuned tonight at 6 for the Just Help One radio show and podcast presented by the Union Rescue Mission. I'll be on again tonight at 6 and every Thursday night with Mark Hood, the CEO of the Union Rescue Mission, the #1 organization helping the homeless here in Los Angeles. Tonight, our special guest is Dion Joseph, nationally recognized law enforcement expert, author of Stepping Across the Line, a Skid Row cop story. He's also a supporter of the Union Rescue Mission. We'll be on the Just Help One radio show at 6 o'clock this evening, so be sure to stay tuned. Stay right here, 790 KABC. Right now, it's Mottek On Money, live on the air, also streaming live online worldwide at KBC.com, and your on-demand Mottek On Money podcast, KBC.com, Apple, iTunes, YouTube, and all your favorite podcast platforms. Stocks ending the day lower today in another seesaw session, struggling for direction today. Investors now focused on the latest tariffs President Trump is proposing, automobile tariffs. Also, we're awaiting the release tomorrow of the Fed's preferred inflation gauge. What we're told is the Fed's favorite reading on inflation will be out tomorrow. The Dow came in for a closing loss of 155 points. The S&P 500 down 19, and the Nasdaq down 95. We see the yield in the 10-year note is back up to 4.37%. Gold and silver popping today. Silver moving higher to $35.08 an ounce, the highest we've seen since October of 2012. Gold also popped nearly $40 higher to settle at a record high of $3,090.90 an ounce. Cryptos have also seen a rebound this week, with Bitcoin moving up above 87,000, Ethereum above 2K, and Doge back to 19 cents. On cryptos this afternoon, I'll be joined live by ELEANOR TERRETT, a well-known name in the crypto world, host of the Crypto America podcast and newsletter. She's also on X, formerly known as Twitter, at ELEANOR TERRETT. I'll discuss the latest on the crypto scene in today's hearing on Capitol Hill for President Trump's Securities and Exchange Commission Chair nominee Paul Atkins, who took questions today from the U.S. Senate Banking Committee. ELEANOR TERRETT was at that hearing and will tell us about the big takeaways live later this hour. On the economy today, we did get the latest on jobless claims. Some 224,000 people who lost their jobs applied last week for unemployment benefits. Looks like the jobless claims numbers fell by federal workers by 1,000. The economic outlook cloudy, and the Fed should be patient about adjusting interest rates, according to the Boston Fed president speaking today. We also heard today from the Richmond Fed president, who said businesses are frozen or paralyzed with indecision, and consumers are showing signs of caution because of all the rapid-fire changes in Washington, creating a fog over the economy. Let's bring in now the one and only Ken Winans on your money, the markets, the economy, gold, silver, crypto too, and the whole works. Joining us live now, Ken Winans, top-ranked money manager, president and chief investment officer at Winans Investments, which you can find at winansinvestments.com. Ken Winans is also a market historian, author of numerous books, including his latest, Investment Atlas 3, creating wealth using historical trends. Also a Forbes magazine contributor. So be sure to check out his latest articles. He also has his crypto credentials too. Ken Winans also hosts Winning with Winans, heard every Monday night right here on your favorite station, 790 KBC at 6 p.m. Ken Winans, thank you very much for coming to the line here this afternoon.
My pleasure, Frank. And, you know, it's all this pre-earnings jittery type stuff that we're dealing with right now. And I know it's driving people crazy. The first 90 days of 2025 is certainly different in a lot of ways than what people thought it would be. But I find that markets go through their cycles. We all have things gyrate around. But it goes back, though, everything you just talked about before I came on, especially about the tariffs and the focus on automotive. And yet what I find so funny, the markets have an amazing way of doing adjustments. And right off the bat, you saw that anything that's tied to auto retail, i.e. parts for cars that they are fixed at home, such as AutoZone and O'Reilly, both had huge days. Both are up 20% on the year. These are old line, boring companies. So again, you just have to just be willing to pivot and adjust to the constant back and forth motion of the markets. It's fascinating to see what's going on right now in a lot of ways.
Most definitely on the air live with Ken Winans. And by the way, I'll be discussing the impact of the latest car news with Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. She'll be joining us live later this hour as well. It was a mixed day for the auto stocks here. While we have you here, Ken Winans, looks like Ford down 4%. Stellantis down 1%. GM slipping 7% in reverse. Tesla slightly higher here. What about the auto names given this uncertain environment?
I think it's more knee-jerk. You know, what's interesting is I've talked to people about the automotive stocks. What I have commented to people on is that there are certain companies that I would much rather lend money to than necessarily own their equities. I mean, a good case in point, General Motors, or for that matter, I'll throw Ford into the mix. I've had Ford bonds in our portfolios for many, many years. They're great companies. The company's well run. It pays its bills on time. Everything's fine. But again, as a stock that I would own for appreciation, you can certainly trade it. But again, it's just not the kind of stock that you would expect a lot of movement in. But this movement today, and I think it's also, let's not forget, we're coming up on the very tail end of a quarter. There's a thing that happens in managed money. It's called window dressing. And I think that people, professional money managers, are going to be selling off stocks that are in the news in a bad way. And I think anything talk about auto tariffs, these managers want to show as they go into second quarter to their clients, see, we're not in these companies. So I think there's a good part of that going on in this mix as well. But Frank, I do think it's so critically important for everybody to think about this. This market is I've said it earlier, this is a different animal than the market of the last 2 years. And I know for people want to say this is a bear market. Let's not forget, after all that's been said and done, the Dow Industrial Average is down a whopping 1% on the year. The S&P 500 is down 3%. And by the way, I'm not counting the dividends, makes it probably down 2%. This is a flat market. It's volatile. It has its days, good and bad, but it's volatile. But when you say that, when it's that kind of market, you do have to become a stock picker, and not even an industry picker or an ETF picker. You've got to know the individual companies. And what I'm saying is that there are plenty of companies out there that already were ahead of the curve on planning for what's happening right now. Those managers paid a lot of money to do a good job on navigating, and many companies are benefiting from that right now, and it will show in the first quarter earnings.
Hard to believe next week, April already, and that April 2nd tariff announcement date coming up, which President Trump has been talking about, so-called Liberation Day is calling it. The president's Tariff Liberation Day. Investors, meanwhile, concerned about that. Any adjustments you're making ahead of what's going to happen next week?
Well, it's funny. Stephanie Larson and I, we co-portfolio manage our portfolios, and we're having just a standard rule right now. I'm a technician by training. Anything that is below its 200-day moving average, you have to wonder why you have it in your portfolio right now. There are other names I'd rather own that are moving in the right direction. The problem that I have is that, and I've been talking about it for quite a while on Mottek On Money and certainly on Winning with WINANS, I saw that the financial sector was going to be a big winner with a Trump win, and certainly it started early in the last year in the fourth quarter. And the problem is you can't just own financial stocks, but yet when I look at the names right here, whether they're banks, money managers, and most notably the insurance companies, they are on a tear, and I know it is counterintuitive, especially for people in Southern California who are battling right now with their insurance carriers on homeowners coverage. But I'm looking at a company like Progressive, symbol PGR. It is up 15% year to date, and it's up 72% in the last 15 months. So again, it just goes to show you do not have to be a tech lover to make money. There's plenty of other places you can go. But Frank, while we're on that very quickly, I know that many people think, they might very well be right, but I'm not in their camp. I'm looking at the tech sector, and I would just simply say that I can show you times in history when tech has not been in a leadership position. A good example, you have a stock like Apple that's down 11% on the year. It's only up 16% in the last 15 months. I know there's a lot of Apple lovers out there. I'm using the product right now to do this interview. But again, I think you have to begin to ask yourself to not love a company, not love the CEO, but look at what's going on with the industry and the company in general and say there's other things I can own. So again, get off the name of a company and look for those companies that might be boring to you, but they're making it happen right now in this new market.
All right, silver taking the spotlight today, the highest we've seen in many years, above $35 an ounce. It looks like we're at $35.35 for silver, up 18%, by the way, since the start of the year. And looks like silver's popped more than $5 since January 1st. Gold also, let's take a look here at $3,069 and change here at the moment, getting a pop up $400 an ounce so far this year, up 15% since the start of the year. What about gold and silver at this point?
And Frank, I'll throw another one in there too, copper. These are all commodities or metals that have ETFs attached to them. Gold is GLD, which is the ETF for them. Silver, SLV. Copper is CPER. Copper's up 27 for the year. Gold is up 16 for the year. Silver's up 19. Yeah, I think it's just safe to say, I mean, some people might say this is a tariff trade. This to me is much more, there's two ways to look at it. You can say it's an inflation play, or you can also say it's a demand play. Do not forget, all of those are used in making products. And globally, they're used in making products. And I think this is good old-fashioned demand, but it is trend is your friend. The trend is up on these. I know in my case, gold has grown to be one of our biggest positions in our portfolios. And I think, again, when you look at somebody who I just mentioned earlier, not to beat up on Apple, I can find a lot of other tech stocks that look like that. But I would say if you're heavy on tech and you have no metals in your portfolio, that is a reason to pivot and rebalance. You're missing a huge opportunity.
All right, what about so-called digital gold, cryptos here, which we'll be focusing in depth here later this hour. But Bitcoin getting a pop this week, back above 87K, Ethereum above 2,000 again, and Doge, which we track here at 19 cents. So what do you see happening with the cryptos here now?
Well, Frank, you're going to have to start adding Solana to your list. I mean, it's now that the futures are trading on it at the Merc, you're going to have to use it. Here's the problem. We're playing some of the post-Trump promise, pre-regulatory moves on what's going on with these. And you talked earlier that the SEC chairman was, having to answer questions about this. I am personally, as a cryptocurrency trader, and I look at these as I do any other commodity. I mean, that's the way I look at them. The simple fact of the matter is you had a major decoupling between Bitcoin and Ethereum that started, it actually started last year, but it went on from here. The traders are in there right now. I mean, Ethereum is down, I think 45% on the year, down 13 the last 15 months. So it's largely given back a lot of the bump that had happened with crypto. I think that the crypto situation is going to be readjusting all over the place. But I will tell you that as a money manager that talks to a lot of people, the people who used to ask me all the time about owning crypto, they have shifted their focus to gold and silver. So they've gone back to the old. At the end of the day, for people who want crypto in their portfolios, this is not necessarily a bad time to look at it, but I would caution you to be careful about Ethereum. That the whole reprogramming of its platform, and I'm not a computer scientist. Somebody much more inclined in this could tell you about it. But whatever the programming protocol change in Ethereum was, it was bad enough to really hammer this thing. Be careful is all I would tell people. I'd stick with Bitcoin right now if you want it in a portfolio. But then the last thing I would just say, if you buy it, don't necessarily buy and hold. If you happen to have bought it at the wrong time, be prepared to sell it and buy it at a later date.
On there live with money manager Ken Winans. And Ken, what about the ancillary stocks connected to crypto, the miners, the various ETFs? You mentioned a couple here, and Coinbase and some of the other names associated with the crypto, including Strategy, which got a pop recently.
You know, of the names you just mentioned, Frank, the one that I still think, and again, that has had a terrible run this year, and also one other quick thing. That relationship with crypto with the NASDAQ, don't forget about it. I know everybody says, oh, no, it's different today. No, it's not. NASDAQ is having a tough time because tech is having a tough time. And I think unless that changes, I think it's the same for crypto. But what I'd say is this. I'm still of the opinion that Coinbase, symbol COIN, if you want to play crypto and you're looking for a value situation, I would be more inclined to play there because, again, it's an exchange. It basically trades any crypto out there. It's not married to one or the other. If you're going to have a stock in your portfolio that's tied to it, I would look at that, or I'd look at Bitcoin ETF. But those are the kind of things you want to look at. But Frank, I'll repeat. I don't necessarily think this is the kind of market that you want to try to catch what we used to call trying to catch a falling knife. When things are down that far, that fast, I would wait for there to be a sense of a bottoming happening, meaning that it stabilizes at a lower level. I would not be trying to pick the bottom That usually is a failed strategy. It doesn't work in the long time. I mean, look at the number of people who tried to bottom pick Google. They've had a tough time with it. Tried to bottom pick even, and look at what's going on with Amazon. Again, the Magnificent Seven are having difficulties. They are in downtrends. I would just be patient before you try to jump in on these things, because in my opinion, until the earnings come out, we really do not know how overpriced they are or underpriced. Wait for the earnings before you step in on anything that has been mauled. That's my key advice tonight.
Middle East still very much in focus. We have seen oil slowly tick higher, getting close to $70 a barrel again. What about the energy patch, given what's happening recently?
Well, you know, I think, again, there's another example. There are certain names that I like that most people have probably never heard of. I'm not buying the big guys right now. The oil names that I like are names like Imperial Oil, which is up 17% on the year. Williams Companies, which is involved with pipeline, happens to be a fairly big play of mine. Symbol WMB. I think there's still bargains out there. And then there's a company out there. Here's a good example. It's called Targa Group. I doubt anybody's ever heard of it. Well, it's one of the best performing oil and gas stocks out there. Its symbol's TRGP. So, Frank, again, the moral of the story, don't go with big, don't go with names that you've heard about. Look for those companies that are truly navigating these interesting rapids in the economy, the global economy, and go from there. Hey, Frank, one other quick thing I want to talk about. It has to do with the foreign ETFs. Many people know last year I commented, I'm not a big fan of buying the foreign ETFs. Hey, I will give credit to you. They've had a nice bounce, but I would just caution people before you start buying out of the U.S., you want to ask yourself the question, in a trade war, the bigger customers win. And I just would caution people before you start embracing Canadian stocks or European stocks or Chinese stocks, just to think that one through. I don't think it's worthwhile to jump into something that's in a political buzzsaw. You might win, but you've got a fair chance of an awful lot of volatility. So again, people who want to buy foreign assets, I just caution you to be very careful.
On there live with money manager Ken Winans. And Ken, I noticed the rental car company's got a pop today and all this car talk and tariff talk. Avis Budget Group moving up about 20%. Hertz moving up 23%. What are your thoughts on those and any other specific places where you are putting money now into or taking it off the table?
You know, I'm glad, Frank, I guess you know I've been traveling a lot. That's why you're bringing this up. I've been renting more cars in the last 2 months than I think I have in a year. I'll tell you what's interesting about the rental car companies. First off, Uber and Lyft are not everywhere. If you go to a small rural area, and I've tried this, by the way, one, if you have cell reception and you can actually use the app, good luck with that. But, you know, when you go to some of these small regional airports, Avis and Hertz and Budget are doing very well. So, these companies are pivoting. They're adjusting to the new markets. They've also changed their models. It's much easier now, even out of Las Vegas, which is where I live now. It is so much easier now to get a car than it used to be, to get out of there and to have the flexibility. So it's not a surprise that you're having a bounce in those. But again, it's counterintuitive because when you talk about auto tariffs and you're having auto stocks move, I know a lot of people are trying to overthink it. Trend is your friend, follow the trends. And I think, again, let's wait and see how the earnings come out over the next 2 to 3 weeks.
Michael Rosenbaum and his Smallville co-stars take you behind the scenes of one of the greatest shows of all time.
We're going to watch every episode.
Join us. It's Big Talk.
You remember when I had to shave my head?
Oh, I think I was angry with this one.
On Smallville.
Yeah, I mean, I get it.
The scene you did, and this is the one that got me fired.
Okay.
What? Here we go.
I love the excursions with me and Welling.
It's everything that Superman stands for.
It's Talkville.
Talkville, we always talk about it. It's a great thing.
The Smallville Rewatch Podcast. Follow and listen on your favorite platform.
Ken, thank you very much for taking the call this afternoon. As always, wish we had more time, and we will certainly on Monday when we're on the air with Winning with Winans, heard every Monday evening at 6 p.m. on your favorite station right here, 790 KABC. That is money manager, top-ranked money manager Ken Winans, the president and chief investment officer at Winans Investments at winansinvestments.com. Ken Winans, also a market historian, author of numerous books, his latest Investment Atlas 3, also Forbes magazine contributor. Ken, thank you very much for joining us live here this afternoon.
My pleasure, Frank. You take care.
You
Bye-bye.
too. Thank you very much, Ken. And out to the freeways we go now on 790 KABC. Mottek On Money continues, 790 KABC. Good afternoon. Another seesaw ride for the stock market today with the Dow and the other major averages ending the day lower. The Dow down 155 at 42,300. The S&P 500 down 19 at 5,693, and the NASDAQ closing down 95 at 17,804. The yield on the 10-year note is back up to 4.37%. Gold, record high today, popping nearly $50. Right now hovering at $3,069 and change, up about 15% since the start of the year. Silver, also the highest we've seen in years, up 23 cents at $35.31 an ounce. Silver has seen a pop as well this year on the order of 15% or so. Taking a look at platinum, it's moved higher as well, up more than $7 at $1,007.90 an ounce. Bitcoin, which we'll be talking more about here shortly, popping higher by more than 300 at the moment to 87,300 or so. Ethereum up 8 at 2,015, and Doge at the moment at 19 cents. Looks like the auto stocks move mostly lower today. We'll be taking a closer look at what's happening with the tariffs impacting your ride. We'll be talking about all that with Lauren Fix later this hour. NVIDIA, meanwhile, down more than $2 at $111 and change. Tesla moving higher by $1.07 at $273.13. Apple up more than $2 at $223.85. And Strategy shares pulling back nearly $5 at $324.59. And now the latest news in 790 KABC. Mottek On Money continues here in 790 KABC. President Trump's pick to run the Securities and Exchange Commission was on Capitol Hill today. Paul Atkins taking questions about crypto and the whole works today. Cryptos have seen a rebound this week with Bitcoin moving back above 87,000, Ethereum above 2K here, and Doge at around 19 cents. Joining us live now is ELEANOR TERRETT, a well-known name in the crypto world, host of the Crypto America podcast and newsletter, and on X, formerly known as Twitter, at ELEANOR TERRETT. ELEANOR TERRETT, thank you very much for taking the call. I understand you were at the hearing on Capitol Hill today for President Trump's SEC Commission Chair nominee, Paul Atkins, who took questions from the U.S. Senate Banking Committee. Thank you so very much for taking the call here this afternoon.
Of course, Frank. Thank you so much for having me. You mentioned that Paul Atkins was taking questions about crypto, but surprisingly, he didn't take very many questions about crypto himself, despite being a pro-crypto guy. The questions were mostly focused on his time as a commissioner during the Bush years, but he did say that a top priority of his chairmanship will be to work with his fellow commissioners and with Congress to provide a firm regulatory foundation for digital assets through a rational, coherent, and principled approach. But yeah, I was a little surprised to not really hear too much on crypto today, Frank, despite, his ties to the industry. And it was a very interesting hearing. I was in the Senate Dirksen building for this hearing, and it was the first time I was there on Capitol Hill, and it was an exciting experience. I have to say, sitting in the hearing room was something I never thought I'd get to experience, but I did today, and it was wonderful.
That's a big day, especially in your world. Crypto, of course, it looks like crypto did come up a few times, but as you indicated, no really big questions, but certainly you've been following this space for quite some time under the previous SEC chair, Gary Gensler, right? So looks like there'll be a new sheriff in town that much more crypto-friendly than he was, right?
That's right. And Atkins did say that he didn't expressively say that the enforcement would be pulled back in so many words, but he signaled that. He said the agency should only use enforcement power if necessary to cure and rectify bad actors. But that was something that Gary Gensler, I think the crypto industry would say, took to the nth degree, and he did a sweeping enforcement crackdown against the industry, and that was in lieu of writing clear and concise rules of the road for issuers and users of digital assets. So it was very much a regulation by enforcement agenda, and now that is being reversed. Atkins isn't even in place yet. He had his nomination hearing today. The Banking Committee still has to vote on his nomination in order to send it to the full Senate for a final vote. So the timing there is TBD. But right now, Mark Ueda, who is the Republican acting chair of the SEC, he has since set up a dedicated crypto task force led by Republican Commissioner Hester Peirce to specifically deal with issues surrounding crypto regulation. And the SEC is actually pulling back on their enforcement actions that they brought under Gensler. They're closing investigations without bringing enforcement actions. They're canceling litigation. Actually, I just broke some news about 15 minutes ago that Crypto.com, the U.S. crypto exchange, is off the hook. They have the SEC has officially closed its investigation into Crypto.com without any enforcement. And an interesting situation there, actually, Gensler's SEC sued Crypto.com, which had it's been one of the few exchanges to avoid being sued by the SEC. The SEC went after Coinbase and Kraken, but did not bring charges against Crypto.com. At least formally, they were sent a wealth notice in October, as recently as October, right? So right before Gensler was set to leave the SEC. And they got the wealth notice, and Crypto.com actually preemptively sued the SEC right back, saying you're engaging in jurisdictional overreach, and we're going to sue you. But then they dropped the case when Donald Trump announced his nomination of Paul Atkins, and they realized that he's a pro crypto guy. It's probably going to be a lot different under this SEC chair than it was under the prior. So we're going to drop the investigation, and everything is kind of happy in crypto land right now, Frank. It's been an interesting journey for me covering it as a journalist. I came into this space around the end of 2021, and that was right at the end of the last bull cycle. But it was right before sort of this entire enforcement crackdown. The SEC had recently gone after Ripple, the blockchain payments firm, and that was sort of the start of the SEC really cracking down on this industry in a big way. And we saw many cases brought after that. But the temperature has changed so much in Washington, D.C. around crypto, and it's been very fascinating to watch unfold just in the last couple months since President Trump was elected.
See it tonight, read about it tomorrow, but hear it now on Mottek On Money on 790 KBC. On the air live with ELEANOR TERRETT, who is with the Crypto America podcast and newsletter, and on X, formerly known as Twitter, at ELEANOR TERRETT. And I know you've been following this very, very closely, so thanks for sharing the very, very latest news with our audience here this afternoon, ELEANOR TERRETT. And what about the new offerings? Looks like Solana now bursting on the scene with the various ETF offerings. Of course, we saw the Bitcoin ETF and the Ethereum ETF and so forth. What's caught your attention as far as what's new out there?
That's right. Well, Wall Street really dived into this digital asset space last year, Frank, with the introduction of the Bitcoin spot ETFs, and notably BlackRock, the biggest money manager in the world, run by Larry Fink, who only a few years ago said that Bitcoin was a vestibule for criminal activity and money laundering. But he has since changed his tune. He's come around. He loves Bitcoin now. And BlackRock is all in on Bitcoin and Ethereum. They have the ETFs dedicated to those assets. And since then, under Gensler, right, they put in place the Bitcoin ETFs, and then the Ethereum ETFs were kind of a touch and go for a little bit. We weren't entirely sure what the SEC's stance was, whether Ethereum was a security or not. Sure enough, 6 months after the Bitcoin spot ETFs were put in place, the Ethereum ETFs were green-lighted, and since then, since Gensler's left, it has been open season, I would say, for SEC filings from different issuers for a vast array of crypto tokens. You mentioned the Solana crypto token. We've seen Fidelity just put forward an application for a Solana spot ETF. So that is an ETF that tracks the daily price of Bitcoin as opposed to a futures ETF, which tracks the future price of the asset. We've had everything from XRP to Cardano to Pudgy Penguins, believe it or not. Pudgy Penguins is an NFT project, and the token associated with that project is called Pingu. So an issuer has actually filed an application for a Pingu spot ETF. So you can just imagine how much work the SEC is currently facing, right? I mean, they've got all these ETF applications, and on top of that, they're running the SEC Crypto Task Force, which has been hosting industry roundtables, the first of which took place last Friday, the first ever roundtable where the SEC engaged with industry players on how to regulate digital assets. The first of which was last Friday, as I mentioned, but the topic of that was trying to figure out how exactly digital assets fit into existing securities laws. And that's been a big conundrum, a big question for a long time, and something that was sort of the undercurrent of the prior SEC under Gensler's enforcement crackdown, right? Because Gensler believed that all digital assets, except for Bitcoin definitely, and maybe Ethereum too, were in fact securities, trading in the same way that stocks and bonds. And he said, therefore, we don't need a new regime. We don't need a new structure for regulating these things. I think they're pretty similar to stocks and bonds in the way that they trade. Some of them are investment contracts, right, where the public puts in their money and they expect a return on that money. He kind of saw that with just a blanket view. And so it's been very interesting to see the SEC take this issue and really get into the weeds. I mean, I was watching that roundtable last Friday, and it was a bunch of very well seasoned securities lawyers and having a friendly kind of back and forth on what constitutes a security and should investment contracts be the focus of how we regulate these things, the how we test? That is probably the most. I never thought I would be so up to date on my Supreme Court rulings, Frank, but the Howey test has become sort of a staple in my reporting, because I focus so much on crypto policy, and so much of how to regulate these things has been circling around that one Supreme Court test. And the shift, like I said, has just been incredible to watch.
Hi, I'm Joe Saul-Sehy, host of the Stacking Benjamin Show.
You want financial independence, don't you? You want to know how all this stuff works instead of these little sound bites?
Listen to some finance people on the radio, and they're like, oh, you're stupid.
Because people fall in this trap all the time.
You don't deserve to have money.
You're buying a lot of air.
Interest sucks.
Oh, the horrors. You never knew personal finance could be this fun.
Subconsciously, I now feel rich.
Oh, geez, like, I'm out of here. Revolution over. We won.
Yeah. Deuces, everybody.
Stacking Benjamins. Follow and listen on your favorite platform.
That is fantastic, Eleanor. Well, it's so great to connect with you here on the air. How can people find your podcast and find you online there?
Oh, well, we are Crypto in America, and we can be found on Spotify, Apple, YouTube. We also post our episodes on X. You guys can follow me at ELEANOR TERRETT, and I'm pretty active. I post my scoops and my breaking news there. I also have a newsletter you can subscribe to. The links are all in my Twitter account. So thank you so much for having me, Frank.
Of
I really
course,
appreciate
and
it.
we'll have many more conversations. Appreciate that very much.
Absolutely.
Hope to see you at the Milken Institute Global Conference coming up here as well, as we've seen you many times in the past, and hope to have a chance to speak with you there. Eleanor TERRETT, thank you very, very much for joining us live here, the host of the Crypto America podcast and newsletter, and an X at Eleanor TERRETT. Eleanor, thank you again very much for joining us live this afternoon.
Thank you, Frank.
Out to the freeways now, 790 KBC. Mottek On Money continues here in 790 KBC. Auto companies back in focus. Your car back in focus. Shares of most of the auto and auto parts companies were getting knocked down today. The Trump administration has rolled out new 25% tariffs on all cars not made in the U.S. and on certain automotive parts, leaving people wondering about the extent to which their vehicles are, in fact, American-made. Today, we also heard from the United Auto Workers Union President Shawn Fain, who's been critical in the past of President Trump. He says the 25% tariffs proposed by President Trump on foreign-made cars is a step to end what he called the free trade disaster. Joining us live now, following all of this very, very closely, as well as the drama involving Tesla and all the terror attacks on dealerships and the vehicles themselves, Lauren Fix is with us now, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Lauren, thank you very much for joining us here. A lot to cover. Give us your reaction to the latest news here today.
There's a lot going on. Starting off with the 25% tariffs, and I need to say this up front. This does not mean that every car you're looking at the lot is going to be 25% more. That's important to know. It has to do with components and parts. It also has to do with where a vehicle is built. And, you think, okay, well, that's like Ford, GM, Stellantis, but really it's Tesla is the number one, which is also a U.S. built car. About 60 to 70% of its parts are from the U.S. They're built in either Texas or California, as we know, but still batteries come out of China and some components come out of Canada and Mexico. But having close as you can to 100%, that would be Tesla. Second in line is Ford. 77% of their vehicles are produced here in the U.S., where 21% in Canada or Mexico and 2% elsewhere. They do get some of their Lincolns out of China. So they're going to have to start making some massive shifts. I'll be posting a video actually tomorrow that'll cover some more deeper dive details if you really want to know, like, what's the percentage, what cars are doing where. But the overall picture to note is if the prices get higher, and some brands will absorb the price, it should be no more than $6,000. Now, that may not seem like a lot, but we're not talking about every single vehicle. And I See Cars had a list of all the vehicles that they thought were going to go up, and they did a study. And the highest priced one that would go up the most is like a Chevy Silverado truck, because it's not assembled here. The components come from different countries. So, but certain things like a Toyota Corolla might go up $3,000. Toyota may decide to absorb that. None of this has been decided yet. This is still, they've got a week to make a decision. But it's also really important to note we might lose some brands such as, in my opinion, Fiat, Alfa Romeo, and Maserati cannot afford to increase the price. They're 100% built in Italy. The components come from Italy and some from Germany. There's no way they're going to be continuing those three brands here in the U.S. So if you're thinking about a deal and you'd like a cool car, I would look at Maserati, Alfa Romeo, and Fiat. because they do offer electric cars, they offer gas cars and hybrid vehicles. Find something that might be a good deal. But every dealer's got a lot of cars in the lot. And if they raise the prices $3,000 to $6,000, they're going to sell even less vehicles. And these are factors that people don't realize. So what's most likely going to happen is you're going to see a lot of incentives because they need to get these 2025s off the lot, and they're just not going at the rate they'd like.
You think it's a good idea to try to rush out and buy a car now or to get your car fixed now?
I would get it fixed now for sure. Parts will get more expensive, not a lot. We're not talking 25%. Depends on components. So if you were looking at an assembly of something, it doesn't matter what a car part, a bushing could come from Canada, but the rubber gasket for it might be here from the U.S. or it might come from China. So, but the rest of the components could be made here in the U.S. And then there are other companies that make 100% U.S. So it depends what you're looking for and what you need. But if you have a repair and you've been putting it off, I'd get that taken care of in the next week if possible. If you're looking for a new car, always a good deal for certified pre-owns. In other words, you go to a Ford dealer for Ford cars or a Mercedes dealer for a Mercedes. Don't look at cross-branding. In other words, a Toyota at a Ford dealership, because you're not going to get your best deal or a transference of the warranty. You want to look for your best deal in that case. And always negotiate, even though people think, oh, they're going to start raising prices. If the window sticker from the factory, it's called a Monroney, has a price on it, that is the price. You can negotiate that price down. But any dealer that puts a padding on, in other words, says we're going to charge X amount more for a tariff fee, you want to leave that dealership. They're unethical. That is not acceptable. And I'm sure that the Federal Trade Commission is going to be going after those companies because that is not ethical whatsoever. And of course, you can go the other direction and walk up and say, I've always owned a Nissan. I want to stick with this brand. What can you do for me? There should be a loyalty discount. And if you're switching brands and you decide to go to a Toyota, for example, from a Nissan, then you would get a Conquest discount. That can range anywhere between $500 and $2,500 depending on the price of the vehicle. But don't leave without getting that money, especially if it's new, because what ends up happening is the dealer gets that money. So any salesperson that says that doesn't exist, you want to ask for the sales manager because it does exist. I used to be a dealer trainer, and a lot of salespeople are unethical, and those are people you don't want to work with.
All right, very briefly, President Trump rattling a lot of cages, of course, being cheered now by the head of the United Auto Workers Union and all this. Hyundai, meanwhile, investing $20 billion in U.S. manufacturing. The president wants to bring more auto manufacturing back to the U.S. Any other big announcements along those lines?
Oh, yeah, there's quite a few. Actually, Hyundai did the smartest move, $20 billion. They're going to open a plant in Louisiana for steel. They're expanding their plant in Georgia. That'll bring in at least 1,500 jobs just in the Louisiana plant for steel. Stellantis is claiming, they haven't done it yet, $5 billion investment in the U.S. in manufacturing, reopening the Belvidere, Illinois plant. Volkswagen announced after this, actually it was about an hour ago, they said they're going to start bringing Audis to Chattanooga, Tennessee, because they can't afford to sell cars otherwise. Honda will open a plant in Indiana, and Nissan says they're going to move some of their production from Mexico to the U.S. So these are just the beginning. This is all within 24 hours. There's going to be a lot more. It's working. Be patient. It may not sound great right now, but it could actually eliminate. The goal is to eliminate personal taxes for the federal government for people that make $150,000 and less. If that happens, fantastic. If it doesn't happen, we go back to what we had. But it's not like you're going to lose ground. So let's hope for the no more federal taxes would be really nice for all of us.
Absolutely, Lauren. Thank you very much for joining us live here. That is Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast, live with us here on Mottek On Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and stay tuned at 6 o'clock this evening for the new Just Help One radio show and podcast presented by the Union Rescue Mission. I'll be back on again tonight at 6 and every Thursday evening with Mark Hood, the CEO of the Union Rescue Mission, the #1 organization helping the homeless here in Los Angeles. Tonight, our special guest is Dion Joseph, nationally recognized law enforcement expert, author of Stepping Across the Line, a Skid Row cop story. He's a supporter of the Union Rescue Mission. We'll be on at 6 o'clock this evening. Stay tuned to 790 KBC.
If you're listening to sports,
if you're looking for an edge rusher, looking for a run stuffer, you're looking for a big-time player in the middle of your defense, you're in luck.
Mixed with pop culture, sprinkled with celebrity interviews.
You hated the title Everybody Loves Raymond. That's true. Is it appropriate for you to tell people to hurry it up?
It's appropriate on Curb Your Enthusiasm.
Bill Burr is here.
I want to know who you defeated to get that title as best dad ever.
I'm the Gonzaga of dads.
And you're enjoying the Rich Eisen Show podcast. Follow and listen on your favorite platform.